The COVID-19 pandemic delivered very significant negative impact to a lot of economies in Africa. The African Development Bank, estimated that between 25 and 30 million jobs have been lost because of the pandemic. So the impact is actually quite significant. CDC was one of the major investors in the Blue Orchard COVID-19 Support Fund. This is a microfinance investment fund that provides a liquidity to microfinance companies that then in turn provide funding to people and small businesses. And this ensures that jobs are preserved. The 2X Challenge is a multilateral initiative to empower women as entrepreneurs, as business leaders, as employees, as well as consumers of goods and services.
So, Kashf actually targets women entrepreneurs to help them set up businesses. Not only that, but to also help them enhance their capacities. So, our impact is not just on the economic side. So, if I very quickly give you the economic impact, what we see is women who have been with us for 2 to 3 years, over 70% of them report increase in income. Over 70% of them report increase in their savings. In terms of self-confidence, which is now the social impact that we measure, a majority of women will tell us that, because they run their own businesses, because their economic agency has improved, they're able to, be more influential in family decision making.
We realize that connectivity is extremely important. Access to quality and affordable connectivity is quite crucial for the growth of businesses. In Africa, access is limited still for broadband. In addition to that, where there is access, the cost of broadband is prohibitive and really high. So our investment in liquid is going to help to be able to address part of that problem.
Just by way of personal introduction, my name's Tony Morgan, Managing Director, Head of Private Equity and Corporate Debt at CDC Group. The purpose of the panel discussion today is to explore CDC's impact on people, with a particular focus on inclusive and quality job creation. I'd also like to explore how innovation is helping to create opportunities, increase people's access to goods and services, and the associated impact this has on their lives. To set the scene, CDC's portfolio businesses in Africa and South Asia employ over 950,000 people and support millions more jobs in their supply chains. Whilst we've seen solid employment growth over the last 5 years, almost 6% per annum, this has become more challenging during COVID, with many of our businesses experiencing flat or in some cases even negative employment growth. At the portfolio level, we estimate the growth rate has almost halved. We'll explore with our panelists today how their businesses have been impacted by COVID and how they've been able to navigate some of the inevitable challenges that the pandemic has caused. CDC also continues to have a particular focus on gender. We know that women are often excluded from economic opportunity in many of our markets, and this has significant economic and societal implications. I'm pleased to say that 2020 has once again seen significant progress in the area of gender-smart investing, and we're proud to be a leader of the 2X Challenge. We've invested over $400 million in the last few years in businesses that fulfill the 2X criteria, and we have a desire to do significantly more than that going forwards. So with that, I'm delighted to introduce our 4 panelists today. Firstly, Roshaneh Zafar, who's the Managing Director of Kashf Foundation. Roshaneh is a pioneer in the development sector with over 30 years experience. She founded Pakistan's first specialized microfinance institution that works towards empowering women micro-entrepreneurs. She also serves on the board of a number of prestigious institutions and has been widely recognized for her contribution to economic development and social entrepreneurship. Secondly, Raghu Talluri, CEO of LoadShare Networks in India. Raghu co-founded LoadShare in 2017 and has been instrumental in building the business to where it is today. We're going to hear a little bit more about LoadShare and Kashf Foundation, but LoadShare is a leading technology-driven logistics company. Previously, he was head of customer experience at Myntra and a former consultant at McKinsey. Third, Jen Braswell, who leads the value creation strategies team at CDC. This is our team of in-house experts that focus on market building and transaction advisory services in some of our priority impact areas: gender equality, climate change, job quality, and skills and leadership. Over the past 3 years, Jen has led a number of significant partnerships in gender finance, including the 2X Challenge and the DFI Gender Finance Collaborative. Prior to joining CDC, Jen worked in a number of senior corporate strategy roles, including Booz Allen. And last but not least, Abhinav Sinha, who heads our manufacturing and technology investing group at CDC. Abhinav led some of our investments in companies such as Liquid Telecom, the Vodafone partnership in Ethiopia, and Zanzibar Pharmaceuticals. Prior to CDC, Abhinav was a partner and managing director at 8 Roads Capital, which is the private equity arm of Fidelity. So with that, I'd like to get straight into questions and start with Abhinav. Abhinav, you lead our manufacturing and technology investing activities at CDC. When you look back in 2020, which investments do you see as having had the biggest impact in our markets, and what kind of impact can these investments have on people's lives?
Thanks, Tony. Tony, 2020 was a pretty momentous year with COVID and all the implications that we saw and we're still actually learning from. So there are 3 investments that I wanted to speak about. One of them is in manufacturing and 2 are in the broader technology space. So in manufacturing, this is a more traditional method for driving development, where you create high quality jobs, and then there are linkages with the supply chain, both on the side of vendors who provide components, as well as distributors who then sell products that you manufacture. But I think what we saw in the pandemic is the need for a very resilient supply chain and the need for local manufacturing to address concerns around protectionism and just having products available. So we made an investment in a pharmaceuticals company called Calyx Bio, where the idea was to provide generic medicine at low cost and very high quality to North Africa. And as luck would have it, this company makes products that are used for post-COVID recovery for patients. And so we immediately saw the importance of having local manufacturing, the fact that you could make products available, that you could flex the supply chain to provide exactly what was needed for countries at that point in time. And we've been very excited with the way this has been going, the way it's also encouraged many other investors to look carefully at manufacturing of pharmaceuticals in Africa. So that was the first one I wanted to speak about. The other 2 are in the broader technology space. Now, the thing about technology is we think of it as a force multiplier. So not only does it provide a sort of digital identity for people, it also enables financial inclusion. You can do a lot of distribution of content within the education or healthcare space. So in effect, it is really the fundamental basis for setting up a digital economy. And there were two investments from us, which I thought were very, very impactful in light of COVID. Because what COVID did, one of the few good things, was a massive increase in adoption of technology. People are just more used to it. I mean, you and I are, and it's the same in our markets. So the first investment was Liquid, where they've now completed the setting up of the fiber optic network in DRC. So this connects DRC from the Atlantic all the way up to Rwanda in the east, and through other networks that they already have, it sort of creates a pan-African fiber optic network. And this then enables people like Airtel and Vodacom to offer telecom, people like Facebook, or YouTube to come in and really provide the content that people need. And what we found very impressive with Liquid was, as they were setting up these fiber networks, they were getting into big towns. I mean, sometimes as many as 100,000 people would never had a phone network. So it's truly transformational in the way people in DRC are now accessing digital connectivity. And then finally, Tony, this was our most recent investment, where we are trying to create the first private mobile network in Ethiopia. This is in collaboration with the Vodafone group and the Safaricom entity, and we're very excited with the sort of additional digital network that we'll create in Ethiopia. Work has started there, and I think it's about addressing the needs of almost 40 million people who don't have phones. It's about creating an immense number of new jobs coming out of this digital network that we create. So look, I'll pause there, but very exciting for us and a lot of impact directly on people through these investments.
Point to that of one of our investees, LoadShare. And Raghu, it would be great to hear from you. What services does the business provide? Who are your customers? And how have you been working with CDC since our original investment?
Yeah, so quickly to introduce LoadShare. LoadShare is a logistics company. We provide logistics all the way from food delivery, which is a 30-minute food delivery for companies, food platforms like Swiggy, to last mile e-commerce deliveries for the likes of Flipkart, Amazon, the large e-commerce marketplaces in India, to B2B companies. You must have heard of Reliance Jio, which is kind of providing services to the retail stores as well as to individual customers, to providing part load and warehousing solutions for non-e-commerce companies like a Johnson & Johnson, Procter & Gamble, Nestle, etc. Right? The FMCG, consumer durables companies. So that's what we do. But our unique thing is we focused on providing solutions not pan-India, but in specific regions, right? And we provide all of these services in specific markets. And one of the things that is unique to us is we've focused on markets or regions that are typically have been very underserved by rest of like corporates, right? And this is the regions in the northeast and east of India. Typically, they have lagged behind in development, and that's where we saw both a coming together of both purpose as well as commercial value proposition. And we set out building our networks over there. It's been 4.5 years since we've been at it, and now where we are is we do around 200,000 deliveries, last mile deliveries every day. We provide around 200 tons per day of part truckload solutions. And we work with literally all the key e-commerce and non-e-commerce companies in India. And we feel that we're clearly solving a pain point in their logistics requirements. We also, the other unique thing about our model and how we've done it is we work with local entrepreneurs, right? We are an asset light company in that sense, primarily technology driven, primarily driven around setting up the right processes, getting the right, aggregating the right demand and getting it delivered through a network of small and medium enterprises and gig economy workers. We work with around 7,000 delivery boys, and we have around 600 trucks that are flying for us, delivering the demand that we've generated across all our customers. And in addition, one of the new technology initiatives that we've launched is to create a platform for small truck fleet owners, and we have 200,000 of them on the platform. So this is broadly what we do. Our association with CDC is actually coincidental to almost the start of COVID. The financial support from CDC came in literally during the first few days of the lockdown that started in India last year. It was in March 2020. And I think it was very timely indeed. And one of the things that we've been able to pull off over the course of the year with support from CDC is we managed to kind of grow double the size of what we were. So compared to what we were in financial year 2020, in financial year 2021, we are more than doubled. Even with COVID being there, we've been benefited from the multiple tailwinds that COVID has offered. But I think the support, coming to the support that we got from CDC, we worked on a few very important points, right? And which had come and which were very timely from a COVID angle as well. Number one, we worked together on developing the medicine and the medicine supply chain, right? So we kind of put together a proposal and CDC was kind to support it, where we said we're going to do medicine delivery to many of the underserved locations. Indeed, very, very timely. And we managed to do a fairly good job executing against that. The other one was to develop the cold chain, which again, in these regions that we work in was pretty and is quite broken yet. And we are still kind of working with multiple bodies to make it happen. So that was the first area of involvement and engagement with CDC beyond the financial support that we got. The second one, very importantly, was, we have 7,000 delivery boys at that time when we started our engagement with CDC. We had around 3,500. We've doubled during the course of the year. So we've added around 3,500 new jobs in that sense. But we did not know a lot about them firsthand, right? We always knew this is the profile of people who come and work with us, but we never went like 2-3 levels deeper. And one of the engagements that we did with CDC was to do a much more in-depth survey of 400 plus workers, a sampling of 400 plus workers, and understand what is it really that drives them? Why are they working with LoadShare? What do they think could be done better? And our idea was, how can we become an employer of choice for them, right? And that starts with kind of knowing who they are, what their demographics are, what their aspirations are, how much do they save, how does LoadShare contribute in their whole financial saving process. So we had a detailed exercise where we uncovered multiple things. What led to that was, number one, we could kind of understand what is the economic profile and what would really make it interesting for them. So for example, one big finding was, if we were to figure out a way to provide leased bikes to our gig workers, that would result in much more higher loyalty. And in fact, we could unlock a much more larger pool of perhaps even more lower economic strata folks who would love to work with us, right? That's one of the big findings that came out of it. Second, we figured out that, look, we assumed that they would be raising grievances, but there was no grievance redressal mechanism. So we kind of put that through using a technology system that we built, and that is something kind of leading to a higher job satisfaction. They feel that there is a way in which they can kind of talk about what are issues that they care about and whether they've been dealt with justly or not. Number three, we put together a training system, which is to be delivered in a remote way. We have a tool called Notice Board, and we use that extensively to deliver the right content, to the extent that now we are very clear we don't need to hire supervisors from outside, right? It's our existing gig economy guys whom we can train and kind of make them supervisors in our system, right? So there are a few very important interventions that we could make through the course of just the identifying through the job quality survey, as well as the subsequent actions to that. And I think the partner income in general, we've seen that has increased by 1.5 to 2x during the course of the year. I think that's one big kind of achievement that we feel good about. I'll pause here and just kind of stop and hear any reactions to that.
That's great to hear. I'd now like to move to Jen, who leads our value creation team at CDC. And we just heard from Raghu, Jen, on some of the very specific projects that we've been working with them on at LoadShare, but it'd be great to hear your perspectives on more broadly on how we work with investee companies to help them drive greater impact in their businesses.
Thank you, Tony. And as Raghu mentioned, we, as an impact investor, take a deeply collaborative partnership approach with all of our investee businesses. We seek to add value. In addition to our investment capital and our catalytic capital, we also bring to the table expertise and capabilities to support our investee businesses to make changes in their business model that can help to drive both growth and impact. The first thing we do is we select management teams and sponsors like Raghu and LoadShare and Roshaneh and Kashf, who are aligned with our values around both sustainable and equitable growth. We bring to the table through our investment capital support for governance improvements, for strengthening operating systems, for managing environmental impacts and improving the way that we manage environmental outcomes of the businesses themselves. And we also support climate resilience. But when we think about people, we bring to the table specific advisory support, including technical assistance through our CDC Plus facilities, through our value creation teams, who are focused on gender diversity, equity and inclusion, as well as looking at the nature of the workforce and the jobs that the company provides to help the business understand the workforce through the worker surveys, like Raghu just mentioned, as well as providing support for people management to help to drive improved working conditions, as well as improved satisfaction amongst workers, which also drives business performance. And so all of this was particularly important over the last year through COVID, as we saw increasing challenges around worker retrenchment, increasing challenges and pressures on our investees. We have been able to work throughout the year with our investing management teams to particularly understand the impacts on women, both women in workforce as well as women managers, and for our financial institutions, the impact for women entrepreneurs as borrowers seeking finance, as well as the impacts on the broader workforce in the businesses. And we feel that we are now able, hopefully soon, to be able to bring more of this capacity building and advisory support to our portfolio as we move into the rebuild phase.
Thank you. Thanks, Jen. One of the things I should say as well is, for all those listening today, please, we'd welcome any questions, and please feel free to submit them, and we'll address them as best we can in the time available. But I'd like to switch tack a little bit. Jen mentioned gender diversity, gender inclusion. And in my opening remarks, I talked about how women are often excluded and the broader economic implications this has. I'd like to hear from Roshaneh on the work the Kashf Foundation are doing, the services you provide, and the people that you reach through your business activities.
For that question, I think that hits an elemental issue that we need to talk about, especially post-COVID as well, because women are the ones that have been affected most by the pandemic in terms of the sectors they work in, and also in terms of the unpaid care that they provide. So the triple burden has been added further to their job. Keep putting that aside, I think let me just talk a bit about what Kashf does. We started 25 years ago to address the needs of women entrepreneurs in Pakistan. Obviously, the first port of call was to offer them financial services, starting with loans. But what we realized along the way was that unless or until we look at the entire value chain for women entrepreneurship, we will not be able to address the key challenges that they face, whether they were related to the economy, or whether they were related to opportunities, economic opportunities, or whether they were related to things like mobility and transport, and ultimately to the household and their ability to make decisions. So we started with the loan side. We replicated the Grameen Bank, but over time we also added a lot of capacity building work on financial education, business development training. And one of the new trainings that we introduced is not letting COVID happen to my business. What we saw post-COVID was that as the lockdown started happening early last year, 92% of our female entrepreneurs, lost their income. And what we needed to do was really to help them build capacities and capabilities to address those gaps. And what we used was technology, interestingly enough. And we trained them to use internet. We trained them how to use the WhatsApp and Facebook to market their products, because a lot of them couldn't access their markets at all. So capacity building is the second piece that we do. Then with time, we realized that vocational training was also important to help women enhance the bandwidth of economic opportunities. And that became the third piece of the work that we were doing. But as we navigated this, we realized that creating economic agency for women is not simple. And when I talk about economic agency, it's really their control over resources and choices and decision making. And even if a woman is earning, it's not necessary that she has control over the income or the assets that are generated. So we had to start a conversation with men in the household. So we started a program which we call Not Without My Mother-in-Law. Again, that's an interesting context, because in South Asia, mother-in-laws have a lot of control over what happens in the household decisions. So we started a gender program for the spouses, for them to support women. So basically, over the years, what we have added are several inputs or interventions other than financial services that help women make better decisions, and where their self-respect and their standing in the household changes. In addition to that, we also do a lot of work on insurance. So what our research showed us over these 25 years, and we tend to do a lot of research to understand how our services and products are helping women, especially, and their families move beyond the poverty line. And what we saw is that health contingencies were one of the factors that hold families back. They may build up the assets, but if somebody falls sick and they don't have the money, and social security systems in countries like ours are very limited, so they have to sell assets, whether business related or household related. And then they go back, and it's like a game of snakes and ladder at the end of the day. So we introduced health insurance and now run one of the largest health insurance programs for low-income families, which covers about 3.6 million individuals at the moment. So at the end of the day, why do we do what we do? And I'll just stop after that. It's really to, if you talk about impact of microfinance services, one of the things we've seen is that when a woman earns, she's more likely to not only invest it in the betterment of her family, by sending her children to better schools, by enhancing the nutritional intake of her family, but she's also the one who's saving. And that saving then comes, in hand, or is handy on a rainy day, or it helps them enhance both their productivity and enhance the quality of life. So it's really about well-being. So when we look at the impact of what we do, we really look at well-being and women at the center of it. And I'll just stop there.
Roshaneh. I'd like to come back to Jen, if I may. Roshaneh mentioned a number of really interesting points in how she thinks about gender in her business. I'd just like to ask you, why is the focus on gender so important, especially in the markets in which we operate? And how would you summarize the progress that you've made over the last year?
Thank you, Tony. I think Roshaneh brilliantly laid out the case for why it's important for women to be meaningfully engaged throughout the entire corporate value chain in the private sector, and why there is, I think, a particular importance of having women participating and earning income, because they in turn have a ripple effect in investing that income disproportionately in family and in community. So in essence, I think women are at the sort of the keystone for development, and are the key to unlocking all of the other barriers that we see to achieve the SDGs. So investing in women is in itself impactful investing. But the other side, looking at this from the seat of an investor, is that investing with a gender lens and understanding where and how women meaningfully participate in the business that you're investing in is also good investing from a business performance point of view. We know that the latest research across the industry is showing that gender diverse management teams and and gender diverse workforce perform better on nearly every metric. So from our perspective as an investor, we are interested in driving forward our investments in a gender smart way so that we can achieve both benefits, the growth and impact outcomes, as well as the improvements in our business and in our investment portfolio. So what we've been doing is to set the stage and demonstrate to the field that investing with a specific and intentional gender lens is good investing and should be adopted across the investment industry. And we've done that, as we've discussed in earlier stages of the program today, through our founding membership in the 2X Challenge, which has established an investment framework that defines what good looks like for gender smart businesses. And we've done that in community with 19 other development finance institutions and multilateral development banks. And now we're moving to a phase of expanding the framework for gender lens investing across a number of other investors and capital allocators across the spectrum, including global pension funds, local institutional investors, large financial institutions, and others who are coming into the understanding and realization that investing in women is good investing. And we're very proud to be leading the charge and helping great companies like Kashf to invest with a gender lens and to support improved livelihoods for women across our markets.
Thank you, Jen. Last year was obviously incredibly challenging for many people for all sorts of reasons, through the COVID pandemic. And I'd like to ask Raghu and then Roshaneh for their reflections on the pandemic and the impact it's had on you and your business. And perhaps I could start with you, Raghu, and then Roshaneh. I'd also then be interested, further question for you when we get to you, how you think it's going to impact microfinance going forwards more generally. But perhaps we could start with Raghu and your reflections on the pandemic.
Yeah, I think the pandemic was a point of time for us to get multiple priorities right, including understanding how important not just employees are to our business, but the whole gig economy workers, and how can we at this point support them so that we earn a lot more in selfish interest, right? I think then we know that kind of supporting them as a family at that point would have longer term implications for us. We kind of, over time, we understood the importance of that. So I think that's one very important reflection as I think back from what it meant. The second one was for me, the fact that we could reset some priorities. And I'll give you an example of this where during the first 2 months last year, March and April, it was like almost complete shutdown for India. And that's a time when we had the luxury of working from home, and our technology team could put together a solution, which is, like a ledger, digital ledger, an app that is a digital ledger for a small fleet owner. And now 1 year out, we have 200,000 trucks on the platform using it. And that kind of gives birth to multiple new different models, like, for example, being able to finance them, provide additional services on which we can earn a commission, right? So it's a completely new business model that got unlocked by just kind of at that point rethinking and kind of saying, hey, look, what else can we do at this point? So I think it's a very important point of reflection for us. Number three, I think for us, post the initial couple of months, I think it just unlocked multiple new areas of growth. So we were in some ways beneficiaries of some tailwinds that came out of COVID. For example, we could now support many clients in actually doing grocery delivery in tier 3-4 towns, which was not possible. I mean, nobody in India thought about that possibility. Online grocery was limited to the maybe top 10 towns in India, or top 10 cities in India. And now we are working with smaller towns that wouldn't make the cut in the top 50, right? And this was a opportunity that we could work with multiple clients to say, hey, look, there is a demand for such services, even in the smaller towns. And we can work together to unlock it by putting together the right business model, the right commercials. And that was therefore a very important kind of a move up for the company. And lastly, I would say just like taking our stakeholders and taking them along, I think was a very, and we've seen it again in the COVID second phase that struck India a couple of months back. I think we felt that us kind of investing in doing the right thing has got like impact at multiple levels, not just you feel good that you've done the right thing, but as a business, as a commercial impact of this, we can see that our guys have not left us, right? Our retention has been higher than ever before of all our gig economy workers. They are more productive, they are more engaged with the company, and that's because we took a bunch of measures that were the right things to do from a humanitarian angle, and we are getting commercial benefits out of that as well, right? So I just pause here as just like open reflections from over the past year or so.
Roshaneh, can I ask you the same question, and then specifically how you think it's going to impact microfinance going forwards in your market and other markets?
Absolutely. So I think the first impact, as I already mentioned, was related to the business opportunities for the household post the lockdown. So they had an immediate cessation of their economic opportunities. So at that time, what we really needed to do was to ensure that they stayed liquid. And rescheduling was something that we had to do immediately as post the lockdown, because households are simply not solvent and their first priority was to feed their families. So as an industry, I think the first thing we've learned is that rescheduling, giving repayment gaps or moratoriums will be something that's here to stay. This we haven't done as an industry. We tend to be very fixated on getting our money back on time. It's the cookie cutter approach or the vanilla approach, the one size fits all approach that we usually follow. So I think one of the things we are learning as an industry is that we will have to come up with more flexible products. So our business had to change immediately. I mean, a lot of things we had to do was on the fly. We didn't have the time to really think about it, not to test it, not to pilot it. So we did mass rescheduling. There's an interesting statistic I'd like to share here with you. And it really talks about the resilience of the micro entrepreneurs, even in the face of such a huge thing as a pandemic that's affecting the whole world. So when we went out there post the lockdown, Pakistan was in a complete lockdown for a month. So in April, end of April, things started opening up. And we had by then designed on the fly several options on how clients could reschedule their loans. And we were assuming that when we gave them the 12-month option where they would start their repayments 12 months later, 90% of the clients would actually take that option. Interestingly enough, only 10% of the clients said they want to reschedule up to 12 months. The remaining clients rescheduled within 90 days. So what that really showed was that the entrepreneurs were more optimistic about the situation than the microfinance institutions themselves were. And what we saw is that businesses started regenerating, and money started coming in, and people started paying us back, and they started their whole cycle again with us. So that was one thing that we learned very quickly. The other thing is segmentation is something we have to do. So within the microfinance industry, there are clients who are growing their businesses much faster. There are others that are growing it much slower. And the pandemic brought that out. And then there are trades and sectors that are working at different thresholds. So that's something we're also having to do now, which is to develop products, multiple products that allow different trades and sectors to leverage their opportunities. The third thing it did for us was going digital. I think that's something many people have mentioned on the panel already, that digitalization became very important because as you lose touch with your clients, and microfinance tends to be a high touch business, we needed to go out there and start training women on opening mobile accounts, on having telephony. A lot of women, there's a digital divide. When we talk about gender and digitalization, the jury is still out. In Pakistan in particular, only 34% of my clients actually own smartphones or own phones at all. In fact, less 20% of them own smartphones, and the remaining own just a regular analog phone. So that limits their ability to ride on the digital wave. So that's something we are now doing, making sure that all our clients, even if they don't have smartphones, they have mobile accounts. So we can do all the transactions. And that's a change in the business that you're going to be seeing the world over with microfinance. And I think the last thing is what we did was to strengthen, similar to what Raghu was saying, as Winston Churchill said, never let a good crisis go to waste. So one of the things we did early on was that we re-looked at our back-end application. And in that space of and time that we had, we rolled out a new application, which was savvier and which was faster and quicker, and which could actually intermediate with the banks, and therefore collections could happen on mobile accounts. So we did all of that also during COVID, realizing that digital was the way forward. So these were some of the aspects that we've been changing, and which we could, it's still work in progress though.
Thank you, Roshaneh. And you mentioned digital and innovation in your speech then. And actually, we've had a few other questions have come in over the chat around CDC's focus on technology and innovation, and why is it important, and what impact can it have more broadly in our businesses. So I'd like to sort of ask Abhinav to reflect on that question and give your perspectives on how you think about and how we think about digital transformation.
Thanks, Tony. Look, the way we think about this whole digital aspect is that this is the only opportunity for our markets to really level up to the developed world, because we find it the most capital efficient way of creating development. And why do we say that? See, the first effort that we think of in digital is to give people a digital identity, right? So, and this could be in the form of just a phone number, or it could be an account and so on. But once people have a digital identity, many things are possible. So you start then getting a credit history. You can be financially included. Once you get a bit of credit, you also get information about markets. You have access to a bit more mobility. And so you then become a proper part of the digital economy. And this is the real transformation that we're seeing in our markets, and we continue to support. There are also some sort of side benefits which are further driving these transformations. So for starters, a lot of your engagement is in the vernacular language. So language is becoming less and less of a constraint as you engage with digital economy. You're dealing with government in a more transparent way. So whether it's about land records or birth records and things like that, you certainly have that much more transparency as you deal with the institutions. And then it's a lot about jobs. I mean, you heard Raghu speak about what he's doing. There are a lot of jobs in fulfillment of these digital models, whether it's on delivery or mobility and so on. And then the next stage of jobs is where you create companies which offer customized solutions. So again, it could be food delivery, it could be about microfinance, it could be about simple apps on entertainment and payment systems. But because it's being done by the local entrepreneurs, it's that much more resilient. It's that much more customized and really transformative. And then over time, you will build companies which would be essentially exporting your technical knowledge. So again, payment systems, that could be entertainment systems. And while this might seem a bit far-fetched today, it was just maybe 20 years ago that China was a developing country, right? And now they are the ones at the forefront of mobile payments or artificial intelligence or TikTok and so on. And you will see a lot of that in our markets as well. And the only way this can be possible is using this digital innovation and digital infrastructure. So Tony, back to you, and I'm happy to take more questions on that.
The same question of Raghu. By definition, you are a technology business, but it'd be great to get your perspectives on how you think about digital transformation and specifically around improving people's jobs and livelihoods and quality jobs.
Yeah, so we've always used all of technology to not just to kind of make operations more efficient, but just to literally build new business models, right? So I'll take one example. While we've done most of our business on using our technology platform, we also saw an opportunity for us to externalize our technology products for the larger logistics ecosystem in India, right? So we work with, let's say, 600 trucks on a daily basis. There would be 10 million plus trucks in India, right? So we are just a small drop in the ocean. And most of the, the truck owners, the fleet owners are all very, very small guys, but they're all very digitally savvy, right? In India, whole digital payments have become quite popular. And when we made this product last year, we just found that by making a technology service that we had internally, just by externalizing it, we could get 200,000 trucks on our platform, right? They are using our platform or our app for registering all the financial transactions. So if they go from point A to point B, how much did they get paid by their client as an advance? How much did they give to the driver? What is the fuel payments that have been made? What is the toll payments that have been made? What is the entire account receivable and payable that they have for that particular trip? What is their profit and loss? Earlier, they used to be kind of scribbling it down on a notebook, and they never would get it right, right? But with this tool and with all the linkages to digital payments, etc., I think it's just like the proof that we see is kind of, even for us as a technology company, quite mind blowing to see the kind of word of mouth, and how just by putting it out on Play Store, we've spent hardly any money on the product in terms of distributing it. But that's the power of technology, right? I mean, just people, one fleet owner talks to other guy saying, hey, I discovered this new product on Play Store, why don't you also use it? And just this word of mouth going virally, and the ease of accessing Play Store and downloading it and kind of experiencing the benefits for yourself is just one example. Now what it leads us to is, now these fleet owners, they put roughly like $1 million worth of receivables on the platform on a daily basis. And seeing that, we are now kind of redefining our business model to say, hey, can we actually tie up with some NBFCs to give them digital lending on the go, right? Now that's a new set of products that we're working on. And that's indeed the transformational power of technology, right? We are a logistics company. We were doing, providing logistics, solutions, and using it for doing deliveries of food, e-commerce deliveries, part truckload deliveries. But look, this is a new world that has opened up for us even. And we are now kind of creating fintech products for the underserved, credit-starved fleet owners, right? Again, I think it's as good a case example that I can think of, which is about just the power of technology. And even for us who always believed in technology, we are kind of blown away by the opportunity and the speed at which transformation can happen, right? So I just want to give this example as something that comes to my mind as an example of how technology can create true impact on the ground.
Thank you, Raghu. I've got another question from the floor here. I think it's going to have to be the last question, and unfortunately. And I'm going to direct this to Jen. And the question is, what are we doing as CDC to ensure that that as businesses and markets rebuild post-COVID, they're doing so in a way that is gender inclusive and meets the economic needs of women?
Great question to close the panel on. This is our challenge over the next year and beyond. We know, and as we've discussed already, that women have faced disproportionate challenges throughout COVID, taking on greater care burden, stepping away from workforce in greater numbers, and particularly women entrepreneurs and founders have faced an even greater gap in access to finance over the course of the last year, which we've seen. So our challenge as investors is to target more intentional capital towards gender smart businesses and women entrepreneurs. And the way that we at CDC will be doing this is through more dedicated investment lines through our intermediaries, particularly through financial institutions, as we create more directed lending products for women entrepreneurs, like through our partners such as Kashf, as well as looking at our intermediaries like fund managers, who themselves have a critical role to play in transferring and cascading our capital out to businesses that are gender smart. And we're seeing more and more fund managers who are coming to the market with a gender strategy. And so what we will be doing is looking to invest our capital into gender smart fund managers, who in turn are investing in gender smart businesses, so that we can keep where and how women participate in the businesses in our portfolio top of mind and very close to the core of our own investment strategy. We are also going to be working through the newly announced industry body, the 2X Collaborative, as I mentioned, to bring more investors into the fold over the rebuild period so that it's not only CDC or only DFIs who are investing with a clear gender lens. We have the full suite of capital providers co-investing with us and building on the demonstrating capital that we provide to invest in businesses that are gender smart and to nudge our businesses in the portfolio to become more gender inclusive, including with more women engaged in senior roles and senior management and on boards, as well as more gender inclusive workforce management to ensure that women don't continue to stay behind and that we can make up the ground that we've lost over the course of the pandemic.
Thank you, Jen. That's sadly the end of the discussion. We could talk for hours on this topic, and I think it's clear that our panelists are all very knowledgeable and very passionate about the topics we've covered today. I'd like to draw this to a conclusion by thanking Raghu and Roshaneh in particular for their time today. They're both very busy people with important and inspirational businesses to run, and we as CDC are proud to have invested in them, and we're 100% committed to continue to work with them to build their businesses and deliver even greater impact going forwards than they do today. Ultimately, when we look to make investments, we always ask ourselves the question, will this make a lasting difference to people's lives? And inclusive and quality job growth is a key pathway to answer that question. And we'll continue to look for businesses like LoadShare and Kashf that we know offer that to us. So with that, I'll say thank you on behalf of all of the panelists. Our next panel discussion is focused on the impact of CDC's capital on the planet. And that's going to be chaired by my colleague, Holger Rothenbusch. Before the discussion starts, we're going to show a short video. So thank you very much for your time.